Welcome to WealthWise TV, your smart destination for finance, business, and market news. Please subscribe the channel. Gold drops below $3,630 as investors digest U.S. inflation figures. Gold stays under modest bearish pressure and trades below $3,630 in the second half of the day on Thursday. The sharp increase seen in jobless claims hurt the U.S. dollar and allow XAU/USD to limit its losses, even though August CPI data came in slightly above analysts' estimates. XAU/USD technical overview. The Daily Relative Strength Index, RSI, remains in overbought territory and backs the case for some near-term consolidation or a further pullback. However, any further slide below the overnight swing low, around the $3,620 area, could find some support near the $3,600 round figure mark ahead of the weekly trough, around the $3,580 region. A convincing break below the latter could pave the way for deeper losses and drag the gold towards the $3,565 to $3,560 intermediate support en route to last Thursday's swing low, around the $3,510 region. On the flip side, the Asian session top, around the $3,649 area, followed by the overnight swing high, around the $3,657 to $3,658 region, might now act as immediate hurdles, above which the gold could retest the all-time peak, around the $3,675 zone. Some follow-through buying could allow the XAU/USD pair to build on the recent breakout momentum and aim towards conquering the $3,700 mark. Bulls, however, might refrain from placing aggressive bets and pause near the said handle, which could act as a strong near-term barrier for the commodity. Fundamental overview. The fundamental backdrop, however, warrants some caution before confirming a near-term top for the precious metal and positioning for an extension of the corrective pullback from the all-time peak touched on Tuesday. Investors now seem convinced that the U.S. Federal Reserve, Fed, will lower borrowing costs next week, which should keep a lid on any further USD appreciation and offer some support to the non-yielding gold. Apart from this, persistent trade-related uncertainties, rising geopolitical tensions, and political uncertainty in France and Japan should contribute to limiting the downside for the XAU/USD pair. Traders might also opt to wait for the release of the latest U.S. consumer inflation figures for more cues about the Fed's rate cut path. Gold drifts lower amid a modest USD uptick and some repositioning ahead of U.S. CPI. The S&P 500 and Nasdaq posted record highs closely on Wednesday, while Japan's Nikkei 225 index jumped over 1% to hit a fresh record high on Thursday. This, in turn, dents demand for traditional safe haven assets and fails to assist the gold to build on the previous day's positive move. The U.S. Bureau of Labor Statistics, BLS, reported on Wednesday that the U.S. Producer Price Index declined to 2.6% on a yearly basis in August from 3.3% in the previous month. Other details showed that the core PPI, which excludes food and energy prices, rose 2.8% YOY compared to 3.7% in July. The lack of producer price pressures, despite import tariffs, could be seen as sign of softening domestic demand against the backdrop of a struggling labor market. This, in turn, reaffirms market expectations that the U.S. Federal Reserve will cut interest rates at its policy meeting next week. Furthermore, traders are pricing in a small possibility of a jumbo rate cut on September 17th and expect the Fed to deliver 325 basis point rate cuts by the end of this year. This should cap the U.S. dollar recovery from its lowest level since July 28th and support the non-yielding yellow metal. On the trade-related front, U.S. President Donald Trump has urged the European Union to slap 100% tariffs on China and India as part of his efforts to pressure Russia to end its war in Ukraine. Trump last month raised tariffs on Indian imports to 50%, citing continuing purchases of Russian oil. Meanwhile, Poland shot down Russian drones on Wednesday that were flying over its airspace after completing a mission in western Ukraine. This is the first time a NATO member nation has fired shots in Russia's war on Ukraine, raising the risk of a further escalation of geopolitical tensions. Furthermore, Trump has threatened tougher sanctions against Russia after its heaviest aerial bombardment on Ukraine, which involved at least 810 drones and 13 missiles. This could further benefit the precious metals safe haven status and contribute to limiting any meaningful corrective slide.